ARM holding stock up roughly 100% year to date. Looking at the price action alone today, up at 1.42% on big volume. Investors are going bananas over ARM Holdings. ARM is the ticker, partly because management is talking about how they are benefiting from the artificial intelligence revolution. And they're saying, look, it's not only NVIDIA that's empowering it. You should look at ARM. AI on ARM is everywhere. So you're talking about the artificial intelligence powered by the central processing units that ARM enables. And you're looking at smartphones. You're looking at some of the cloud infrastructures where NVIDIA actually integrates some CPUs with some of their products. It's, NVIDIA is mostly known for the GPU market, but you're also talking about autonomous vehicles like Cruise. You're also talking about Internet of Things. So everywhere that you can use a CPU to help enable users with artificial intelligence, they're saying, look, ARM is actually one of these key players. And when you look at ARM, they talk about being one of the world's most pervasive CPU architecture. So over 280 billion chips shipped since inception that have the ARM-based infrastructure. So this is a very powerful monopoly type of business. This is a type of unrivaled company that I normally like to see. And you get some very strong advantages when you have the defined, architecture that everyone uses, because, hey, everyone uses it. So you have this, this ecosystem of software where people say, oh, okay, there are thousands of people already using this. We're going to use this to integrate, into new applications or new functions like an autonomous vehicles or like Internet of Things. You want smart cameras. You already have a base of builders that can leverage the ARM infrastructure. And a key aspect of what they've done with the ARM infrastructure with the CPUs is to help make it more power efficiency, use less electricity, and also increasing the performance of these CPUs. That's the key aspects of what drives, customers to say, oh yeah, we should use this standard ARM infrastructure, ARM, foundational architecture for the chips. And because of this aspect of this business model, it makes it very attractive, because this means customers are either licensing from them or paying very nice royalty fees. And whenever you're thinking about licensing or royalty fees, you're talking about high margins with lots of free cash flow. That's why investors like to look at this. And so the question is, well, is ARM going to be an AI winner, or is it just an example of a company where investors are just going bananas? Investors are taking one idea too far, and I'll share some of my thoughts on this in just a second. First of all, in full disclosure, this is not financial advice. As we look at ARM's actual results, their sales only grew 13% in the most recent quarter. This is hardly the revolution that you're seeing with NVIDIA stock. This is part of the reason why I think the recent run with looking at the results for ARM is just that it's a bit much. Investors are getting a little trigger happy in terms of the potential for this business. Yes, it's exceptional, but 200% growth for NVIDIA versus 13% growth for ARM is quite a difference. They are guiding to around 20% growth for fiscal 24, so expecting an acceleration in this business. But look, this is still heavily tied to the CPU market with dominant market share position there, for this architecture. But, you're talking about a business with $3 billion in sales, around $3.2 billion in sales. You are talking about a business that's growing at a good clip, but you're also talking about a business with a $145 billion market cap. So $3 billion in sales, $145 billion market cap. That's, in my opinion, bananas. Like 45 times sales, for a business that, I can understand 45 times sales for, let's say, a startup where you're like, oh, we are going to go exponential in the years ahead. I'm not so sure that you can do that with ARM. I don't think it would just surprise me. Like what math would you need to see in order just to even break even with the current market cap? And so we'll talk about that dynamic in just a second. So where does ARM go from here? First, a quick plug. Recently on our exclusive Discord server, a member of Unrivaled Investing of the premium subscription relayed that he believes Unrivaled Investing has the best cost performance ratio. That's a direct quote relative to alternative investing subscription services available. So if you're looking for compelling investment ideas, consider Unrivaled Investing, which includes a weekly letter and my personal portfolio updates in real time. I also have educational materials, how to, think about reading financial statements or valuing stocks. I made this with in mind, based on my own personal experience on Wall Street, what I would have wanted to know when I first started. All the, the various different lessons from looking at, arguably thousands of companies over time. So as I think about the valuation for ARM, this is a hypothetical framework. Of course, stock price can go way higher, way lower, but I think it is helpful for investors to consider, what would it take just to break even? And so here it is, 3 different scenarios, nope, silly, and bananas. In the highest scenario, bananas, I'm assuming 35% profit margins. That's nowhere near where they currently are. This is significantly higher. And 35% growth for the next 5 years, which once again is multiples of their current growth rate, and a 30 times earnings multiple 5 years from now. In this scenario, the most optimistic of these 3 different scenarios, it's down 25% over the next 5 years. So this reiterates the point on why I think ARM is currently bananas. Investors are going absolutely, crazy over any type of stock that mentions AI and shows like, hey, AI could be a big part of our growth trajectory, or AI is helping drive this business. So what are alternatives? When I see what's going on with ARM, it does make me think I want to hold more cash. I personally keep my cash at Interactive Brokers, currently yielding over 4.8%. See the link below for Interactive Brokers. I think this type of mania does give me pause. It makes me think everyone's sort of chasing. You got a lot of FOMO. It is a concern. So it makes me want to hold more cash, makes me want to reflect on my positions. I don't like to see this type of animal spirits. Another alternative, I recently did not 1, but 2 separate videos on one of my top holdings called Fairfax Financial. You can see it here on YouTube. I also share, broadly where I find compelling, what I find compelling, individual ideas that I mostly save for my exclusive subscribers at unrivaledinvesting.com, the weekly updates and, when I call out when I'm buying something saying, hey, here's the reason why. But, I don't often call out my top holdings on YouTube. But I did this just in response because it was actually a short report on Fairfax. So I wanted to talk about it because I thought it could create an opportunity for those folks that are looking to explore different types of companies. Fairfax is an insurance company based in Canada. So is ARM an AI winner? Well, I think it could be a winner, but ultimately it comes down to, a couple of different ideas. And I'm showing a screenshot of AI ticker chat because I think it's worthwhile for investors to reflect. You can have a company that wins and benefits from this AI revolution, but it doesn't necessarily mean investors will benefit. You can have a company that's unrivaled, such as, possibly ARM, where you're saying, hey, it has this monopoly type position with CPU infrastructure, but you could still be a loser from an investment perspective because the starting valuation is just so rich. And I think that's something for investors to consider right now, especially as you see the stock just going bananas, going, perpendicular, going parabolic, I should say, over the last few days of, AI revolution. This is amazing. I think it's worthwhile to understand who actually wins with the AI revolution. Well, if the internet is any sort of, example, well, was it Yellow Pages then became yellowpages.com and they won? No, it was a new form factor. It was a new type of business that won. It was Google. And Google wasn't even the first. Was it all these independent travel agencies that won just by adding a .com to their name? Or was it Priceline or Bookings that figured out how to rapidly take market share? Was it the Airbnb? Airbnb sort of came up with a whole new business model, but I'm sharing Google, I'm sharing Priceline or Booking because of this example of it's oftentimes a new player that comes in. It's not just the legacy institutions, legacy infrastructure. So I would personally mentally put ARM as this sort of legacy infrastructure that will likely win, but I don't necessarily view it as shareholders winning in the future. I think what will win, I think consumers broadly win with the AI revolution, but I think what you're going to see is just lots and lots of new assistants and helpers that can, and new apps where you go, wow, this is functionality that we didn't even get before. Previously people used Yahoo Finance. Now you can use, AI ticker chat and you can get next level type of insights. And I think it's going to be series of these AI functions, AI tools that where you go, wow, this wasn't even something I conceived of previously. Like Yahoo Finance didn't tell me, what's the range of this stock that it could be in the future, or Yahoo Finance didn't explain to me why is the stock higher or lower on these results. Now you can do that by leveraging artificial intelligence, and I believe it's going to be the new players, partly because of there was a wonderful book, I couldn't find it, but it was Clay Christensen's Innovator's Dilemma, and that's a classic. Google's the classic example right now, because the search business model is it's very different margins than running the AI powered inquiries that you're seeing, the GPT type of inquiries, the LLM inquiries, which is much more costly. And so you have the existing players say, okay, how do I want to adapt to that? And so that's, Innovator's Dilemma is, okay, someone else comes in and they offer something that, it might be a much, much lower price point, and it might not solve the total solution that you're looking for, but if it addresses this niche and it does it in a really clever way, then it slowly takes market share over time, and these innovators can start, adding new features and going up market, and that disrupts the markets. So Innovator's Dilemma, I'd highly recommend you think about, or get the book or read the Cliff Notes version, just because I think that's where we are right now with this AI revolution. I think ARM will benefit, but I think, as always, there are only three things that drive returns over time, folks. There's the fundamentals. Fundamentals, let's say, are great for ARM. But then there's the free cash flow to shareholders, and then there's the valuation. And if the valuation, resets, you can have a period where, despite strong growth, the valuation create a headwind where you're actually underwater. And that's why I tried showing with the valuation framework is that ARM could be, you might be better off holding cash than ARM for the next few years. And that's why I was calling out with that framework. I hope this video has been helpful for you thinking about ARM and the current AI revolution. I'm sharing my own personal product that I'm helping co-found. That's AI Ticker Chat. So check that out. First month is free. Hope this video has been helpful for you. Thanks so much for tuning in.